Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, September 29th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice in the previous session here that price held above the previous week's high. A key level we talked about throughout the pre-market video here, the 33.26s was very important, and if we can hold above it, it still is short-term bullish, but a failure could open up more weakness ahead. So we're still watching that level very closely. But for right now, you'll notice here that price has bounced pretty nicely here off the lows. We have two more full sessions here, including today, in the month of September, and then we roll over to the month of October. And you'll notice right now that we have a lower value relationship with the pivot range at the moment. Current last price is this blue dotted line right here, and this is also below the pivot range for the next month, and that would be a bearish indication for more weakness ahead. That would be the first time we've seen that since the sell-off back here where we sold off in February, and then we had a lower value relationship here, and that usually leads to a push into the pivot range early the next month, followed by selling pressure to new lows. That could be the case here if we continue to close here as we are. A push into the pivot range next month could be a selling opportunity for another round of weakness. Now, where this changes is the midpoint of the next month. So basically this midpoint from here to here, we get that key level right there, and that's the midpoint of the next month's range there, and that is the 33.92s. So 33.92 is that level, 92.5 I believe, right there. And if price can close above that level by the end of the month, that would be a lower value with a change of bias. That means that we could be headed higher. That would be a very bullish indication to close above that zone. Otherwise, to close below the bottom of the pivot range by the end of the month, by the end of tomorrow, would be bearish. And again, any push higher could be sold into 3400, for example, for a retest of lows or perhaps a push through those lows early next month. So that's going to be something to keep an eye on as we finish out the month ahead. Now keep in mind, we will be hosting the monthly market outlook on Thursday after the market closes, after the first trading day of the month. We also have the NFP report early Friday morning. So again, are we going to form a lower high and drop here? How's that going to play out? It's going to be very interesting here. Again, 33.26 is going to be very important as it remains the previous week's high. A failure to hold that level could start to rotate this thing down a bit. All right, let's take a look here at the NQ. The NQ, again, very similar to the ES here, has developed a lower value relationship here. Price is currently below the projected next month's pivot range. That would be bearish. But we've had a pretty decent bounce here so far. We've continued to hold above the previous week's high price, which is 11,222s. Again, that level is very important. If it fails to hold that level, we may begin to see weakness. But holding above that level, we know has the potential to get us to the previous edge here. That's 538. That's the previous week's high there. Was 538 prior, and then last week's high here, I believe, 11. Yeah, a little bit higher there. So we're already through that zone here, approaching the previous week's high from the prior week at 538. We have the 500 level, which is the previous or the current month's midpoint here on the pivot range. So we're coming into major overhead resistance. That's the point. All of this zone right here is where we've been dropping off of. So if we can't start to get strength or find strength here through the 500, 550 zone, we may begin to rotate back down again for a retest of the recent lows. So again, we'll continue to watch this over the next couple of days as it heads into the end of the month. All right, taking a look now at crude oil. You'll see with crude oil, this one has continued to develop within a very narrow range again, very similar to what we've seen here. And it appears we are very, very close to seeing the next breakout move. And it may be to the upside yet again. This one had a sell signal here and it had the potential to drop, but instead the very next day it closed above that midpoint, and ever since it's been pushing higher highs and higher lows day over day. And you can see that has now created a new compression phase on a 3-day basis, very compressed. But this is bigger than a 3-day range. We have 1, 2, 3, 4, 5, 6, 7, 8, 9 days here that we could go back to. So if we bring this up to 9 right here, it'll quantify that 9-day range. It's narrow on a 10-day range as well, but you can see it's 54% of average. And once we break out, we may see a move to this upper red dot. And that is currently 6 points away, or 6 points of range. So again, with a compression of this magnitude here, we're building up just like we did last time. Look at the 4-day range we saw here. We may be looking to stretch this thing again, and we might see a move that takes out the key range high here. Remember, we've overtaken this key range low here. We've seen nothing but defense. We may be looking to rally back to 43.52 to 44, and it may be happening soon. As a matter of fact, the 60-minute time frame right now, with 15 minutes to go left in the hour as of this point in the recording here, has a bullish rejection signal that is developing, a buy signal here that could be an early indication of continuation higher. So again, we are building that energy, compression on the ADR indicator here, and whichever way we go could be significant, but right now things look to be lining up for an upside push. Let's take a look now at gold futures. You'll see right here gold, we talked about the narrow range that was developing in the previous session. 3-day narrow range, it's happening at the key range low. I mentioned this was likely the best prime buying opportunity for a reversal back to value. Value being this HVN right there. D-shaped profile here, bottom of value rejecting the prior key range low would also suggest a move into the midpoint of that key range, 1981.70, plus the LVN of 1957.70. That's a pretty good target zone for this, and that's been a magnet for price before. So if price can continue to hold the 1870 zone here, we have a good shot to continue higher into this target zone above. However, any failure to hold 1870 could start to open up another round of weakness. As a matter of fact, we are testing the bearish Pima trigger zone right here after breaking down to the downside, pulling back, testing that bearish Pima trigger zone. That could offer another opportunity to sell this thing for bears, and it could push price back toward 1800. So there's no guarantee we move higher, but as of right now, we are seeing the types of things that we need to see in order for this thing to move higher. And 1870 to 1875 here is going to be a very important level to defend for a continuation higher in the short term. Failure to hold that level may open up new lows ahead as the lower high takes place. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.